Without a coherent, plausible resolution policy, without a policy to be able to take down one of these institutions without intolerable spillovers, then we're likely to have absolutely no market discipline on the large players, and we'll have to rely almost exclusively on regulatory discipline, which is always proven to be inadequate. Barney Frank has sort of control over the agenda, as well as a lot of the money. And he said that he's going to look at things in two stages, and so he's really setting the agenda. The first will be to look at the problem of finding a systemic regulator, and his view is that it should be the Fed. Others disagree, but he may well prevail. He wanted to put off as long as possible the problem of reorganizing the regulatory system so that it's sort of drawn into the modern world and looks more comprehensive. As anybody who's taken financial institutions knows, we have the most Byzantine regulatory structure in the United States you can imagine. And it has not been an asset in resolving these difficulties, but actually you can't really blame the structure, and that's been a bit of a problem. The reason he's put it off is that mergers will be politically very difficult. I think lots of people think that it's a good idea, merging, for example, the OCC and the OTS, which has disgraced itself at every opportunity, should be a no-brainer since they're both in the Treasury, but they have different oversight committees. Merging the SEC and the Commodities Futures Trading Exchange should be also a no-brainer, but the Agriculture Committee has domain over the CFTC, and the Financial Services Committee has domain over the SEC, and it's actually funds from those groups that get all those people reelected. So the chances are, I think he's probably wise not to tackle that one out front. We probably will see a federal charter for insurance companies, but it's going to be voluntary for small companies, and one hopes that it will be mandatory for the AIGs of this world. But there's really no certainty to it. What should be on the agenda? Well, I think the way to approach it is actually to establish good banks that are transparent and eager to lend. And that means removing the bad assets. That does mean winding some of them down. And it means having a very, very careful definition of what a systemic regulator is. It can't be based on the kind of institution, because we've learned that it isn't just banks that can cause systemic difficulties. You can be systemic because you're too big to fail. You can be systemic because you're too interconnected to fail. You can be systemic because you're too complex to fail. And it strikes me that any one of those institutions should be required to file, at least annually, a report, as they do now for business continuation plans, that would be unwinding plans. And if the regulators find them not plausible, they may have to simplify their structures or spin off some of the complexity. But until you do that, until you're able to have a resolution system that can actually deal with these giant institutions without the threat of bringing the whole system down around us, we're not really going to be where we want to be. We're going to be in a world where you have increasing government controls and really incredible amounts of debt and taxes.